Okay. Take a look at attendees. Let's see who comes in. All right. Yep, Ken, welcome to the webinar. We got a front row seat for you. Trina, you're good. People are flowing in. We're about a minute before showtime, and we're running probably about a minute after 12 to give people a chance to get in and get ready for the R&D tax credit. And I got to admit, this is a financial benefit. I've been in finance for 30 years. I've heard about the R&D tax credit, but I didn't know that it was available for so many companies. And we're gonna, Julio and Jill are going to make us smarter about this today, because it probably is available to the folks coming in. So Charles, welcome to the event. Kind of seeing who's coming in here. Yeah, Robert, Sonia. This is a way to get a little more, maybe a lot of working capital back into your business. So, hey, as you come in, if you go to the chat box and if you enter the city that you're in, it'll help us kind of gear the conversation. There might be something that pops out. We've got Helen from Fairfax, not too far. I'm in Bethesda, Maryland, right outside of DC, so not too far away. In Houston, that's my hometown. Round Rock, Texas, my parents are there outside of Austin. I love it. We're still working together as a country, right? We got Julio at West Palm Beach, and Jill is in Houston as well. So very good. Amen. Okay. So people are coming in San Diego. Somebody give me an excuse to make that trip.
Yeah.
So ready.
I'll trade for San Diego. A little humid here.
Yep. Okay, so to kick things off, the topic today is the R&D tax credit, and this will put more cash into your business, and most likely with the right expertise, you do qualify. So my name is Kirk. I'm the CEO of Foresight CFO, and we're a global operation. There's literally 32 of us on 3 different continents, working side by side with CEOs with the numbers. Let's bring clarity to our options and that execution to increase profit, maximize the valuation of a business. In addition, I teach the same thing. I teach financial management at Georgetown for grad students, part of kind of elevating the level of play that more people have. And I'm really happy. I was talking to Julio and Jill before the event, and as a growth CFO, I gotta say I love the topic, because it's like the kind of thing. Well, why wouldn't you at least see what's available to you? So Julio, could you take a minute and introduce yourself, and then we'll bring Jill into it?
Yeah, Kirk, thanks for having me here, and thanks for everyone in the audience. We appreciate it. We've been doing the research and development tax credits now for 2 decades. So we're a specialty tax firm. We primarily work with CPA firms nationally, being their resource. We have engineers and scientists on staff. So when their client is doing R&D activity, we're behind the scenes working for the CPA firm and their client to make sure that they maximize these tax credits, really, which is a refund of labor for hiring USA companies, hiring US employees, building up US employment, and creating innovation within their company through that employment. So we reward that here in the United States with what's called the Research and Development Tax Credit. And our goal really over the last 2 decades was that when Jill and I were in the big accounting world, we were doing this for public companies, but the CPA firms in the mid-size and small-size business community didn't have the engineering and scientific resources. So we created that community so that when their clients were doing something good, like hiring in the United States with US employees, and they were creating innovation within their companies, that we would be behind the resources to help their clients get these credits. Now, Jill, who runs our Houston office and is the R&D tax queen of the country, is, obviously the expert, the foremost expert in R&D tax credits, and she helps many small businesses get these refunds on a daily basis. And I think Jill's been so instrumental in helping companies with survival during the COVID, where they don't have the capital. They're trying to get the PPP loans, maybe the Main Street Capital loans, but they didn't realize they could go back 3 years and get a significant refund on the labor, the payroll that they paid, because that payroll was part of the R&D tax credit. And so Jill's been instrumental in working with small companies and their CPA firms across the country to make sure that they're at least looking at the R&D tax credit, getting these incentives, getting these credits, and getting these refunds. And so with that, it's a great honor for me to introduce Jill.
Yeah, okay. Julio, thank you.
My pleasure.
Thank you, Julio, for such a great introduction. You've got my bio in front of you, but the purpose of today's webinar is to really let you, the small to mid-sized business, know that there's so many great avenues to be explored to get cash back into the business. And the R&D tax credit, I feel, is one of the most powerful incentives available to businesses today. So yes, I am in Houston. I was looking to see where everyone is from. I was going to say good morning, but it looks like we have some people from the East Coast. So good afternoon. I noticed there's someone from Colombia. And then to my Round Rock friends, I go to Georgetown all the time. So hello to my fellow Texans. So that's me in a nutshell. I am from the Big Eight and wound up in the world of these specialty tax incentives. And it's truly a passion of mine. I just want to make sure that all businesses look at these avenues that are available to them to get cash back into the business.
Yeah, thank you so much. And so let's kind of take a step here. I want to really know who's in the room, what size companies we are, and how COVID is impacting everyone. I'm going to put up a couple of poll questions. You know, and your responses are anonymous, right? But we want to gear who's in the room. So the first poll question is, you know, what was your top line revenue in the prior year? And it'd be great if we can get to a 70% or more participation, because your vote counts, right? More than ever this year. And so what was your top line revenue in the prior year, 2019, and then this year? What do you expect? Are you going to increase, decrease, or stay about the same from a top line standpoint? So we'll give you just a minute. And again, your responses are anonymous. We'll share statistically the results, but it's not going to have anybody's name attached to it. So we're at 68. I'll keep it open for just probably a couple more people. Yeah, we hit 70%. So I'll keep it open just a few more seconds, and then I'm going to share the responses with you. Okay. And my numbers are bounced up and down, but we're gonna move on here. So I'm gonna end the poll and share results. And take a look here. So about half of the companies are doing 0 to 5 million in revenue, so obviously the other half are doing 5 million plus. 22%, 10 to 40, and then kind of that 40 to 70, about 6%. You know, 40 and 70 and above. Very good. It's what kind of a wide range group, but this will help us talk about, you know, what's available for us, for the small business owner. And check this out. I mean, you know, a third are going to decrease, right? I mean, overall, the economy, we're in a recession, it's contracting. So a third are decreasing, you know, trying to figure out the way forward, may need to pivot, who knows about their specifics. But almost 40% staying about the same. That's pretty good. And another third are actually increasing this year, right? We have a client that was down 90% revenue, and they pivoted, and we won't get back to 90%, but we're going to be okay. So very good. That was helpful. I appreciate your response. Okay. And Jill, this is time we're going to launch. You ready to launch?
I'm ready to launch. And great poll questions, because it shows me that the audience that we have and that range of sales revenue is just perfect for this discussion. It's the businesses at this level that don't think they qualify that do. So this discussion, we're going to keep it high level. I'm going to go over this very powerful incentive. And if you don't think you qualify now, hopefully by the end of the presentation, you know that you do. So I'm going to take you kind of on a treasure hunt. And we're going to look at this credit, and we're going to see where it's buried and what we can do for you. As an FYI, my firm, Engineer Tax Services, we go into every one of our clients, and we will give you, the client, a no-cost analysis to let you know, is there something there that's, should we go and capture? And again, that's at no cost. So just know that the option is there for you to go ahead and claim this credit. So cash is king. Let's not forget that. So I'm going to start off this presentation with the area that interests most of my clients, and those are some of our case studies. And I've got a few case studies here, and this will show you the power of this credit in a variety of different industries. There's many more case industries on my website, but these I thought were a good sampling to show everyone. So here's someone in a biochemical industry. The first item you'll see, the R&D wages, that's the big item that we throw into the bucket for the R&D tax credit is wages at 1.4 million for this example. We can also throw supplies in. In this example, we have about $500,000 in supplies. No rental of leases of computers, so I'll let you know about that on a future slide. And no contract research, outside consultants on this. We can throw all of that into the bucket, but for this case, we have 1.9 in qualified expenditures, and this client was able to get back about $190,000 just for 1 year of activities. So that's a great benefit for this client. Next, we have someone that's a fabricator. Fabricators do lots of R&D. They're coming up with items for their clients. With this one, we've got about 3 million in wages. Here we can throw over 4 million, 4.6 million in supplies into that R&D bucket. That's because in this industry, they have to go through a lot of supplies to get to that unit that works. So we throw in about 4.7 million in supplies. Here we've got some contract research, outside consultants. That is someone that the company needed their expertise, to not have them in-house, so they hired someone to do this specific activity. We can throw that into the R&D bucket as well. I'll get into that a little bit later on how we do that. But suffice it to say, we've got 7.8 million in qualified expenditures, and this client was able to get back in the first year over $400,000. So a great benefit for this one. Next, we have an architect. We are a preferred provider for the AIA, the American Institute of Architects. And so here we have an architect doing a lot of design work. They have about 3.7 million in qualified wages. They had to hire out some outside consultants. Maybe they needed an engineer to do some specific activity. We can throw those costs into the bucket. We've got about 4 million or so in qualified expenditures for a $200,000 plus credit for this client. Next, I chose an engineering firm. When I hear the word engineer, that's a huge buzzword because engineers exist to solve problems, and that's where the R&D credit is hidden. So here we've got an engineering firm, about 1.2 million in wages that we can throw into this bucket. No supplies. We did not use any outside or had to lease any specific computers for their activities. So we have contract research for this client of about $500,000. So they had to hire quite a few outside consultants. But at the end of the day, we've got 1.7 million in qualified expenditures for a $90,000 credit. And you can tell this credit ranges all over the place. And that's because there's different methods of calculation that we have to look at. And everyone's finances are different for those numbers that we throw in the calculations. But that's a more detailed subject. That's getting into the weeds a little bit. For this discussion, I'm just going to stress to you that if you don't think you qualify for the credit, chances are you do. So we're not going to get too much into the calculation methods. And finally, for my last case study, we have a software developer. Software development nowadays is huge. Think of all the apps we use and the programs we use. So here we have a software developer paying about 4.5 million in wages. For this developer, they had to lease specific computers for a specific project they were doing. In that case, we can throw in the cost of those computers. And then we've got about 4 million or so in qualified expenditures for a $600,000 credit for this software developer. Software is huge in claiming the credits. So I wanted to start off with some examples so you could see how powerful this credit is for just about any industry. Yeah. So to give you...
Hey, Jill, those are massive. I mean, 5 to 10%. I mean, for every dollar of savings or money back, I mean, it falls right to the bottom line profitability, and yeah, it recurs, right? It's not a one-time thing.
And then, I'm sorry, but the neat thing about this is that it's for activities that you've already done. So you've done the work. Now the government is incentivizing you for doing that using US labor. It's really a labor incentive to perform activities in the United States. So yes, it's just great. You've already done it. Now you're going to get paid for doing it in the form of huge credits. Thank you for mentioning that. So to give you a little bit of information about the credit, as I stated, it's to keep innovation in America. And this credit started actually way back in the dark ages in 1981, and it was always expiring. So it was always on the books every 2 years. It expired, and it was terrible for tax planning because we never knew for sure it was going to be extended or not. So luckily, with the PATH Act in 2015, it became permanent. A great change for this tax credit. Now, we know, CPAs know, businesses know that this is on the books for good, and it's something that should be explored every year. In addition to being able to claim the credit at the federal level, you can also claim it in over 40 states, which is awesome for businesses. So, for example, I'm in Texas. So I have a client, they're doing activities, we can get them a credit back at the federal side and also at the state side. Now, the states don't mirror the federal government in terms of what they give back. Some are better, some are a little less. But in any event, it's a wonderful benefit to be able to take advantage of depending on the state in which you're located. And then also, the credit is international. It's offered in many countries around the world. So you may have heard that there some US companies are taking activities and bringing them overseas. And that's because a lot of countries have credits more powerful than ours. So hopefully they'll up the credit here in the US just a little bit more. And then as far as companies that do qualify for the credit, you'll see on the next slide that we can look at any type of entity. So it's not just C Corps, S Corps, flow-through entities. People will say, I'm a C Corp, do I qualify? Or I'm an S Corp, do I qualify? Any type of entity can qualify for this credit, which is wonderful. And again, a flow-through entity can qualify. You could have 1 shareholder or 30. That does not matter. And for trying to figure out what that credit is worth to the business, for every $1 million we have in wages that qualify, figure about a 10% credit. When we come in and actually do the study, of course, we'll get that down to the penny, but that's just for you to kind of determine what that credit would be worth to you. And again, this is a credit. It's not a deduction. It is below the line. So it is stronger than a deduction. So if I get a company back $100,000 credit and they have a $100,000 tax liability, that negates the tax liability. That's why it's such a wonderful incentive for businesses to explore. To make it even better, we can carry it back 1 year if you can't use it this year. And you can also carry it forward 20 years. So let's just say I did a study for a company. We got them $100,000 credit. They couldn't use $50,000, but they know in 2020 they're going to have a huge tax liability. Now we can offset that 2020 with part of the 2019 credit and then the 2020 credit as well. To make it even better, we can look at the current tax year, which is 2019. So let's say I got a company back $100,000 credit for 2019. We can also go back 3 years in time. So now we can look at 18, 17, and 16. So for argument's sake, let's just say we get $100,000 credit every year. That $100,000 credit just turned into a $400,000 credit. And that doesn't even include any state incentives. So this just shows you how powerful this incentive is to businesses. So this credit, as you can tell, goes through changes all the time. And the next slide will show you how there was some great changes made to this credit via the PATH Act in 2015. One, as I mentioned, made this credit permanent, which is awesome for business. Next, startups were able to benefit from the credit. So a startup, you have a new software developer, they're just trying to figure out all their programming. They're not paying tax. Most startups are in losses, but so much of our R&D activities occur in startups. So what the government did was say, hey, listen, it's silly for a startup not to be able to benefit from this tax credit simply because they're not paying tax, but they are doing the activities. So the change was that startups can now offset their payroll tax. If a startup has employees, not every startup does, there's a lot of sweat equity out there, but there's startups that have 50, 100 employees with huge payrolls, and we can now offset payroll tax with that tax credit. And in addition, lots of companies are in AMT, and the PATH Act got rid of the AMT provision for companies under 50 million a year in sales revenue. So that's no longer an issue for that size company. Next, a change that came through the CARES Act, which is a wonderful act that's helping to get cash back into businesses, which we really need so much today. The CARES Act has put back on the books our net operating losses. So net operating loss carrybacks, excuse me. So what this means is, let's say I go into a company for their 2019 tax year. I get them $100,000 credit and they can't use it. I can go back now for up to 5 years and claim refunds for those years that they paid tax in. So that's another way to get cash back into the business. So that was a great change to the CARES Act. So just know that there's wonderful opportunities for any kind of business to get cash back into the business. And that's what we're here for, to help businesses determine if there's something out there that they can claim. So I'm going to get into a little bit of what this R&D tax credit is. I won't go into the weeds, but a lot of people, it's still such a fuzzy area. And I want it to be not so fuzzy. And I want people to know that chances are that you are doing something that qualifies. Maybe not everything you're doing qualifies, but a lot of what you're doing qualifies. So when we go into a company, we have to follow what's known as the 4-part test. And that's what you see in front of you. So every activity we're looking at basically meets this 4-part test. And I'll get into the detail of that in my future slides. But we're looking at a new or improved business component. This item has to be technological in nature. We have to eliminate uncertainty. And we have to experiment in order to eliminate that uncertainty. So that's what we come in and do as a company to help you claim the credit. We make sure everything passes this 4-part test. So to let you know what this test is, first we're going to look at the business component on the next slide. And that shows you that a business component is basically a product, process, technique, invention, formula, or software. So it has to be one of those items, and it's whatever you're doing to one of those items. You're making it faster, lighter, better, cheaper. Those are the activities that we look at to satisfy this part 1 of the 4-part test. I did want to mention that you do not have to succeed in any of your activities to qualify for the credit. I have clients that may have 5 projects for the year and 3 did not take. They couldn't get to their final solution. That's fine. That shows us that there was activities. They didn't succeed, but they had activities that would qualify for the R&D credit. So now everything that this company actually did qualifies for the R&D tax credit. So that's your business component. Part 2 of that 4-part test on the next slide is that it's technological in nature. Basically, what that means is that it is a physical or biological science on the next slide, Kirk.
Yep.
Thank you.
You taught me when I was making notes.
Good, I'm glad. It's based on a hard science, engineering, computer sciences. It's not based on a soft science. So psychology, for example, we're not looking at that. We're looking at hard sciences as one of the components of that 4-part test. And next, we're eliminating uncertainty. We know where we want to be on the next slide, but we're not sure how to get there. We're just not sure. So we're going to go down all these paths and see which one is going to work for our end solution. So we're eliminating those paths that do not qualify. And the next slide is on process of experimentation, and that goes hand in hand with uncertainty. We're going to experiment to see which is that path that we're going to go down. So that's basically the 4-part test. And so when my company comes in, we will look at again, all of those items for each activity to see what qualifies for the R&D credit. Next, there are certain things that do not qualify, and one of the big ones is funded research. So you need to get from point A to point B. Someone's giving you $100,000 to do that. That does not qualify. You have to bear economic risk in doing that. Now, most companies do, but there are some times where you are getting paid to perform an activity, and that would not qualify. And then you also have to maintain the IP rights to whatever it is that you have discovered. So again, excluded activities, research after commercial production. You're trying to figure out how to make a widget. You've made that first widget. Everything after that, those activities don't qualify. We're just looking at everything up to making that first widget. Reverse engineering, taking someone else's widget and seeing how they made it, that does not qualify. And then also quality control activities don't qualify. The next slide is really interesting because most people think they are in an industry that does not qualify. And I want everyone to know that chances are you are in an industry that does indeed qualify. Most industries qualify. The ones that don't are service type industries. So a medical office, for example, or a bank would not qualify unless that bank has produced their own software, which a lot of banks do, as you know, developing their apps. But here's a list of some of the top industries that qualify. The main one is engineering. They have about 61% of the total amount spent on R&D, or the total credit that's given back to businesses on R&D. Next is software. And then all these other industries make up the remainder of what we do give for the R&D tax credit. I did want to point out, like on food processors, which is, I love that because I get to get samples. When you go into your grocers and everything you see hanging on the grocer's shelves, food processing, consumer food and beverage, great for the R&D tax credit when you think about the formulations that they're coming up with for that food item. And then apparel, I wanted to mention that because when I'm working with an apparel manufacturer, lots of times they'll say we don't qualify because we are manufacturing in China, for example. And that's okay. We look at activities that occur in the US. So lots of apparel manufacturers, jewelry manufacturers will do a lot of design work here in the US. And then they take that design and then they manufacture it in another country. We can look at all of those activities up until the point when it leaves the US. So don't discount yourself because something is manufactured overseas. And the next slide will show you what we're looking at for activities that qualify. And I'm not going to go through each one of these, but I want to point out certain buzzwords to you. So in looking at this list, you'll see innovation, development, design, prototyping, technologies. You're using new materials. You're streamlining your processes. You're improving some activity. All of those, when we're talking to our clients, when we're asking about what they're doing, when I hear those buzzwords, that tells me that there's R&D activities there. And again, excuse me, it didn't translate too well on the bottom where success is not required. I wanted to stress that again, that all of these activities, you do not need to get to point B. You can still be stuck at point A, and those activities will still qualify.
Yeah. Hey, Jill, there's a couple of questions that are coming in that fit right here. Chris is asking, does the product need to be used by others or just your own company? So internal versus external use.
Well, in the world of software, we have internal use software. There's different qualifications that we look at for software as opposed to someone that's developing an app for someone else. I won't get into the weeds on that. But yes, if you're developing something for in-house use, that does qualify. That was a great question. Thank you.
Great, great. I got one more question. This is from Cameron. He says, would a credit include outsourced efforts, such as if you use an outsourced software development company? Would that
Yes, and we can look at anything that's outsourced. We have to make sure that you maintain the rights to what's ever discovered using that. Chances are you probably do, and that you've got risk involved. So when we're looking at companies that qualify, you may have a contract with someone. Most companies have contracts, and we have to look at each if you've got thousands of contracts, we don't look at every one, but we'll look at your contracts for the terms in that contract. And so again, you have to maintain risk. So if you have a contract with someone outside your firm and it's time and material, chances are there is no risk there, because let's say you're getting paid for those activities, no matter how long it takes. But if it's a fixed fee contract, there's financial risk there. So everything depends on that particular activity and the contracts, but don't negate anything. Just know that chances are it could qualify, and that's what we'll do as a company to see if it does or not. So excellent question. And on the next slide, Kirk, I wanted to show you, we've kind of been discussing this along the way of what we're throwing into that R&D bucket. So the big one is wages. And of everything we throw in that bucket, about 65% make up the majority of dollars in that bucket. I did want to point out, and this is a great benefit, that let's say you have an employee and they're spending 80% of their time on these activities that do qualify. We are allowed to throw into that bucket 100% of what that employee has been paid. So let's say they earn $100,000. They spend 80% of their time on software development. We can throw in $100,000 into that bucket. So that's a great benefit. Contract research, outside consultants, that makes up about 25% of what we throw into that bucket. And then the rest is supplies, coming in at about 10% or so. And that supplies used in getting to that unit of first production. Okay. So those are the three main components. I did want to point out on the next slide that wages are your W-2 wages. And again, if 80% of an employee's time is spent on qualifying activities, we're going to throw in 100%. So that can really add up for a lot of my clients. And the wages have to be for the employee engaged in an activity, as pointed out on the next slide. So we look at that employee, and then we also look at the wages for their direct supervisor, and then one level below. So we get to look at 3 different levels, and that's our direct activities. And then we've got indirect activities that we can also throw into the bucket. So the dollars that we throw into this bucket just grow all the time. So we've got direct supervision, people that are putting reports together, testing, putting prototypes together. There's all additional indirect labor activities that we can throw into the bucket. And then next on supplies, that's not land, for example, any improvements to land. But when we're looking at supplies, it's the supplies that were incurred in getting to that unit of first production. So that's basically general supplies, any type of construction materials that we're using, materials used to put molds together, and the cost of utilities in that R&D activity. So not lighting in your facility, but a lot of times there's utilities that are geared just for that R&D activity. And then that's what we find out coming in to explore the activities of your firm. What does qualify and what doesn't? So on the last slide, I wanted to point out, or the slide for what we throw in the bucket, contract research. Is when you're paying an outside consultant, we cannot throw in 100% into that bucket. So you need to hire an outside engineer. You pay them $100,000 to perform these activities. We've determined that qualify, we can throw in 65% or $65,000 into that R&D bucket. So that's basically what this is about, that we don't throw in 100%, we can throw in outside consultants at 65%. And this next slide is really, really interesting. This shows you the power of the R&D tax credit in the United States. So back in 2009, companies claimed about $8 billion or so in R&D tax credits. Fast forward just 10 years and we're up to about 18 billion, going higher. So this is money put back into U.S. business. So I wanted you to see how powerful this is for U.S. businesses. On the next slide, I wanted to point out why companies are not claiming this credit. And the big one is that companies are self-centering. Companies think they do not qualify. And they, not every activity will qualify. If they do, that's great. But a lot of companies think everything they do is something that does not qualify. I have a recent client that really did not think they qualified. They said, what we do, we do every day. But per tax code, what they do every day is an R&D activity. So self-censoring is the big killer for the R&D tax credit. And then next, a lot of companies, as I mentioned, think they don't have qualifying activities. And that's because so many companies think of the dictionary definition. So when you're thinking R&D, most companies think I have a lab, I have someone in a white lab coat, they have a beaker in their hand, and they're shouting out Eureka. That is R&D, but that's really the old world R&D. Fast forward to where we are today, and we look at the tax definition of R&D. And as you may recall, that's basically anything that a company is doing that's new or improved to itself. So that's basically the R&D tax credit, very high level in a nutshell. I wanted just to give you a high level overview to get you to think that, maybe this is something we should look at, because the money's there to be claimed. We just have to document the activities in order for you to make that claim. So on the next slide, a little bit of information about our firm. So we are actually a licensed engineering firm specializing in tax mitigation strategies. So our engineers will actually do the studies for our clients. So our software engineers will speak the language of a software developer, for example, and they can maximize those benefits for our clients. And another box I'm extremely proud of is our achievements. We get back over $100 million a month in refunds for our clients. So
Jill, that's decent.
Yeah, that's I wish it was for like my company, but $100 million a month in tax credits. And that's just phenomenal. And so many of those clients are people that would not have claimed the credit had they not known that they qualified for it. These are some of our clients. Not all of these were for R&D. We have several other tax incentives that we work with at Engineer Tax Services. One of the areas is cost segregation, which is accelerating depreciation on a structure. However, I just have a client that is manufacturing widgets, and they have a new warehouse facility. And so what we're doing for this client is we're looking at the R&D tax credit and doing a cost segregation study at the same time for that facility. So that's why I wanted to put this up here, that there's a lot of areas that we can look at to get cash back into your business.
Yeah.
And then, oh, yes.
Well, hey, so a question, I want to pick up, got two questions here. We can kind of do it as we go. Cameron asked about in a bootstrap software development company, where the founders are not taking a salary, should the founders be recording a deferred compensation? Can you get a tax credit based on deferred unpaid compensation?
We have to look at this moment in time and look at their payroll tax. So we can claim the credit and hold it on the books. As mentioned, we can hold it on the books for 20 years.
Oh, wow.
But if there's nothing to offset right now, there's nothing to offset. So if they've paid zero in payroll tax, there's no payroll tax for me to get back. Just like income tax. If you're in losses, well, now we can carry back, but if you're in losses, there's no income tax this year to offset. So we have to go back or go forward. So it's basically the same concept. So thank you for asking that.
Yeah.
And then just a little bit more information about my firm. We are over 150 professionals now. I think we're getting closer to 200. We're made up of engineers, CPAs. Our headquarters is actually West Palm Beach, California. That's where Julio was speaking from. I mentioned we do other studies other than our R&D tax credit. And this credit and our services are from clients that have a small facility all the way up to over $1 billion. So size, it does not matter in this case. It's truly, do you have the activities that qualify? And if you do, we want to make sure that we can get you back those refunds to which you are entitled, those credits. We do work with CPA firms across the country. We work with thousands of CPA firms. When we work with a client, we always like to bring in your outside CPA, your trusted advisor. CPAs will hire my firm to do these studies simply because they just don't have the bandwidth to do what we do in-house. Most CPA firms don't have engineers on staff, so they will use us. So I like to make the analogy, the CPA firm is the general doctor and we're the heart surgeon. So the CPA will bring us in. They know that the client may be doing something that qualifies for the R&D tax credit. Not sure if there's an issue, and they'll bring us in to look at that. So that's my presentation. You've got on this next slide all of my contact information. Please feel free to reach out to me at any time, either via email or phone. We're available to answer any of your questions. If you've got more detailed tax questions, we can certainly get into the weeds and see if it's an area to be further explored. And again, we're just here to help you decide if you do qualify for the credit. And if you do, let's get that cash back into the business. That's what it's all about. So that's the end of my presentation. I tried to keep it high level. Kirk, thank you so much for having me present to such a great audience from, I guess, all over the world, since I saw someone out of the country. And for those of you that have used Kirk before, he just brings such an invaluable service to companies. And for those of you that haven't, because I love working with you, Kirk, you need to give him a call. That's my little plug for you. He's just great at what he does. So thank you, everyone.
Yeah, appreciate that. So let's kind of back up, Jill and Julio. This basically what you're offering, most of the time you go through the CPA firm, but here's a chance for CEOs directly to find out what they qualify for. And in the rules, basically what you took us through, I mean, it's wide open. It's if you don't have tax, you can apply it to your payroll tax, right? You can carry it backwards. The R&D doesn't have to work, and you can still get your credit back. And again, it's a credit, dollar for dollar. You're getting money back. It's not a deduction. So it's for folks, if you got some level of business activity going on, it's almost like why not find out what's available to you? And it's the money, it's the solution. It's the R&D tax credit that every year, you can repeat it. So it's not a one-time benefit. It's something that you can actually enhance the profitability of your business on a go-forward basis with. So why not do it? Just kind of to cover the bases here, I appreciate you kind of tying us into this, Jill, because we do team with CEOs, and among the things they're looking for is how do we achieve that top percentile financial performance? In this case, with the R&D tax credit, we're increasing profitability and we're accelerating your cash flow. So that's all good, and we do this through the 2% CEO habits of profitability, where through Growth CFO and accounting work, really putting these habits in place so that the numbers are complementing what the business is already doing. And likewise, if you want to find out more about how we work with CEOs to have that clarity and confidence about going forward, contact me. So going back to the main theme is, if you haven't done it, if you haven't done the R&D tax credit, definitely contact Jill and find out specifically what can be done for your business, because it is, for our clients, I won't say it's free money, but it's free money. So very much appreciate everybody. We responded to the questions as they came in. We're at time. We are going to send out a link to download the slide decks after this webinar. So definitely, reach out to the folks and find out what can be done to enhance your business. Julio, Jill, thank you so much. I mean, this is one of those things that most of us don't hear about, except for you guys taking effort to help get the word out. So thank you so much for jumping on with us.
My pleasure. Thank you.
Okay, and we'll see the rest of you soon.